You do definitely want some occupancy in there, because right now it's really hard to get, if you're an office owner, it's really hard to do a refi. You think it's hard for multifamily, you wait till you try to get an office loan right now. They're maybe 50% on their prior value. It's just brutal out there for them.
Tim is one of the most authentic and genuine people I've ever met.
Sincerely believe he's coming from a position of giving, and that means a lot.
You're going to make huge progress.
Welcome everybody to today's capital raising show. I'm your host, Tim Mai, and today I have an amazing guest on the line with us. This is actually my second time interviewing him because of another podcast that I'm doing with Javier Hinojo. And however, I'm super excited because we're going to talk a lot about capital raising today with Kenny Wolf. Kenny he started Wolf Investments and got into this syndication space 13 years ago. And he is a published author of Investing in the Dream, How to Acquire Multifamily Real Estate and Attain Financial Freedom, and Your Quest to Financial Freedom. So 2 books. And he started his first multifamily property in 2010. And that has transformed his life and gave up his day job to start the company. And Kenny is very passionate about helping others attain financial freedom through real estate investing. He believes in the power of passive income. We all like that, right?
That's right.
money that works while we're sleeping. Kenny has grown Wolf Investments to over $675 million worth of commercial real estate nationwide. And he has an MBA from UT Arlington and a BBA from Baylor University. And Kenny lives in Plano, Texas with his wife, daughter, and son. And he's into vegans. So Kenny, you've been a vegan for how long? Like 11 years or some long time?
13 years.
13 years. Wow.
Yeah,
wow.
Before it was cool.
Awesome. Yes. Welcome, Kenny. And everybody, let's give Kenny a big welcome. Woohoo!
Thank you, guys. Hi,
Yes.
Trevor.
Yeah, Trevor mentioned he has both of your books
autographed with a photo.
All right.
Oh, that's awesome. Yes. Yes. Kenny, if you can share with us a little bit about your background and what got you into this syndication space.
Sure. So my background was oil and gas accounting. I was a CFO at a fairly young age for an oil and gas spinoff company over in Shreveport, Louisiana. So we did that for about 3 years and then decided to jump into multifamily. So I did 2 passive investments first to learn the ropes. One was a big fixer-upper, and I chose 2 very different types of deals. So one was a fixer-upper. Back then, I think we bought it for $12 a door from the bank and then had to put another $10 a door into it to fix it up. So we had the huge basis of $22 a door in Arlington, Texas. So I learned that. I was just a passive, but I asked a lot of questions and figured out who I wanted on my team from that team. And the yield play for Fannie was a Fannie Mae loan. And that was good to see if there's different teammates for a Fannie or a yield play, who do you use for what role? And then also that allowed me to get non-recourse financing. My third deal, which I syndicated 76 units, there's 12 of us besides me in that deal, and then just took off from there. Wow.
Okay. And that first deal, what was y'all's total raise on that first deal?
$825,000.
So not a lot.
It wasn't huge. That was still the early days of coming out of the 2008, 2010 recession.
Oh, yeah.
So that was the challenge, was at that point, it was debt and equity, because the debt was just waking up too a little bit. The deals were there on the market.
And did you have any challenges in that first race?
Yeah. So we one of my former bosses was going to put in $75K, which is a big chunk of 825. And then I was like 2 weeks without, hey, I haven't seen your 75K come in yet. Oh, where is it? And we're closing here in 2 weeks. And then he goes, oh, I can't invest anymore. The tax bill is too high, or was the reason given. But anyway, so I had to scramble at that time. 75K was a lot of money, but allow myself to freak out for about 3 seconds and then start hitting the phones again. So it's what you got to do. Grind it out.
Gotcha. That's awesome. And I can imagine, or do you see any similarities in the challenges to raise capital in today's market, especially this year, compared to 2010?
Yeah, honestly, it feels a little similar. We were raising money in 2020. We bought some great big institutional assets, 21, 22. Man, it was like manna from heaven. Everybody knew about multifamily. It was a cool thing to invest in. So we're raising a lot of money. And then I noticed a switch October of last year, 2022. And that really, people just basically put pencils down, it felt. And to me, I think just now, I'd say even up until May, I just started to see investors come out and start to invest again. But I still feel like we're maybe 50% speed. And it'll build, I think, towards the end of the year, but it's been a grind for October till maybe even just up until last month in May.
Gotcha. What are you doing differently now to make sure you get all your raises done that you weren't doing before this year?
Sure. And so really, I mean, it's being more active on social media. We put out educational videos every week on our YouTube channel, and I'm speaking at events as often as I can. I was in Boston and Rhode Island last week speaking, and those kind of deals. And then really just making sure we're letting our current investors know, update them on their projects, and they're still performing. We're collecting rents. Rents are growing. Just this kind of reassurance kind of mantra has been the thing the past 5-6 months.
Okay. So yeah, can you share with everyone a little bit about what your portfolio looks like now, and then what type of projects you're currently working on and raising capital for?
Sure. Yeah. So we still buy existing multifamily. So we just bought 211 1981 built townhomes down in Houston. So we're putting granite countertops and all that kind of stuff. So we still buy those today. We did branch out. So we have 2 different arms to our company as well. We've got 60 like Dollar Generals, Walgreens, CVS, triple net, double net assets in 17 different states, and which is great for monthly cash flow. There's no better monthly cash flow than that. But you'll give up some appreciation and then the opposite of that monthly cash flow is development. So we do ground up multifamily in Texas and Ohio right now. And then we also have 11 office buildings that we've bought to convert to multifamily. So we've got 2.2 million square feet of those office conversions right now.
Wow. Okay. So you invest in triple net for the easy work.
Exactly,
and then you get to this new development, these conversions for the crazy headache work.
Yeah, exactly. Hopefully bigger gains, right?
Yes, of course.
Yeah.
Awesome. And then, so with the new construction, where are those deals at?
We have projects here in Dallas, Fort Worth, and then we have the ground up constructions all around Cleveland right now. We've got Cleveland was the past 2 years just been phenomenal because they had a 15-year property tax abatement with no strings attached, which is phenomenal. Wow. Their property taxes are almost as bad as ours in Texas. So it's a big deal. And then on top of that, it was opportunity zone in those locations as well. And so we've been building as much as we can. Next year, that property tax abatement definitely has some major strings attached to it. So we're trying to get as many approved this year through the end of the year as we can.
Okay. In terms of raising money, I'm curious into the customer avatar that invests in your triple net versus your value add versus your new construction or your conversion. Are they the same investors that are investing with you in all different places, or the investor profile is different?
There's definitely folks that like mix and match and pair some together. And those folks are really, I hate to say it, but we almost get too much depreciation on multifamily. So we've seen people pair up from some of our triple net funds into alongside a multifamily, and basically the depreciation not only offsets the multifamily money cash flow there, but it also offsets some of the triple net. So you'll see some of that. Some folks invest in all three, but they're different. If we're being stereotypical, our triple net are really for folks that really want that monthly stable income. In my mind, it's someone who's driving around their RV, wants a monthly ACH just rolling in every single month, but not worried about big growth. Well, there'll be some growth, but they're not worried about huge growth. And then multifamily somewhere in between, and then development, it's someone that's probably younger, but that's not always the case. But someone looking to grow their capital faster, typically who we see go to those.
I see. Okay, that makes sense. So before you got on, we were just chit-chatting as a group. And so we have a challenge for you.
Okay.
If you have, and we have a pretty mixed group that are on right now, new, some experience, some very experienced. But if you have to raise $1 million a week, you have to raise $1 million a week in this market, what would all be all different things that you would do to do that?
Oh man, $1 million a week. You got to hit the phones, obviously, right? And hit your current investor group. Those are your easiest. Those can be your easiest conversions. It's also finding new people, right? Especially in today's market with not a lot of sales, not a lot of refis. A lot of your current investors, their capital, as much as they would love to reinvest with you, it's stuck in the properties because there's not a lot of deal flow right now, both mostly on the sales side. We're doing some refis, so we're working through some of that, and they'll get some cash out. But it's also finding new people. So it's really getting on a plane, talking to folks at live events. Networking is everything in multifamily syndication. Hosting your own meetups. We host our own meetup once a month here in town. And then we also co-host a multifamily conference 3 times a year, a bigger one called MFIN. And that usually brings in some new folks as well.
Gotcha. Okay. So networking at events, hosting your meetup groups, and so you host the conferences as well. What are you doing? Obviously, you mentioned earlier about your social media, putting out content every week. Is there any particular platform on social media that you're most active in, or do you put it out everywhere?
So Facebook I'm very, very active on. Our younger folks finally got me on Instagram, so I'm on there. And then our YouTube channel is pretty active as well. LinkedIn is the worst, and maybe I shouldn't say that out loud, but I'm not a fan of LinkedIn. I haven't found a lot of value out of there, just because it's always folks trying to sell me stuff, and it's never investors. So it's always, hey, I'm a roofer. I can sell you a cheap flooring, but we have never raised, I think, one investor off of LinkedIn, and maybe that's partly just because I've got a bad taste in my mouth about it and haven't put a lot of effort into it. So that could be it for sure. But we're way more, we see a lot more views and investor engagement on Instagram, Facebook, and YouTube.
Gotcha. Okay, good to know. You're the first person who, not LinkedIn being among your least favorite. So that's that's awesome. Yeah, that's interesting because a lot of people talk up on LinkedIn, so that's an interesting. But I totally get it about all the different messages you get on there. I wish there's a better way to filter it.
I know, right? Jeez.
Yeah. They should do what Facebook does, which is like all the people that you don't know, put them into a what is it, like message request box? You know what I'm talking about on Messenger?
Yeah, or a junk folder.
Yeah. that would totally help a lot. Okay. And then all right, anything else that you would do besides all these events and these social media? Obviously you would include podcasts like this as part of events.
Yeah, you got to be on the Tim Mai show. That's what you got to
do. Thank you. Yes. Do you get on a lot of podcasts, and do you have your own podcast as well?
Well, I am on a lot of podcasts. I'm probably on 1 or 2 a week. And then we do have a podcast, but really what we do is to peel back the curtain a little bit is tomorrow, Wednesday mornings, we shoot 2 or 3 YouTube videos. I bring 3 different shirts to have some Hollywood magic in there. But then they cut the video. They actually pulled the audio from our YouTube channel and put that on as our podcast. So it's a way for us to just shoot once and create multiple different. And then we also now have a guy who shortens those clips and puts them in on TikTok and all that kind of stuff. So I'm on TikTok, but I don't know. I don't actually have the app on my phone, so I am on there. But
Gotcha. So we get to see Kenny dance, y'all. If you go check out his TikTok.
If you do, that's a CGI thing. I don't know if I've danced yet on TikTok, but
I don't know if you ever seen Javier's dancing, but it's he calls it dancing anyways. So with all the projects you have going on right now, are you the main capital raiser within your business?
Yeah, we also, yes and no. So we have a great team. I've got an investor relations manager, Savannah. She does a great job. So she handles a lot of our setting up our events, and she's the first point of contact for investors. She and I meet twice a day, it feels like, to answer any investor questions. But that's how, now that we've got 3,000 on our investor portal, I have quite a lot of active investors. I had to move to that stage.
Gotcha. Okay. And then, so it's mainly just the 2 of you then, correct?
Yeah, we also have a marketing lady in-house as well. So Christine does our marketing. And so that she does a lot of the YouTube and the making sure emails get out and everything like that. So there's probably 3, I could say 3 of us that are active in it.
Okay, I see. So with all of the events that you attend and the podcast interviews and the social media, where does all of that traffic go to? Does it go to your main website? Is there a specific like lead gen funnel that you send people to? What's your process there?
Yeah, so we always try to send them back to our website. So there's a spot they can put in their email and set up a call or a meeting and all that kind of stuff. So we try to force everything back to the website and specifically to that spot for them to put their email in.
Okay. And then is there a lead, like a lead magnet? Is there some kind of offer bribe to get them to sign up for that?
Yeah, so I think and this may be old, so I apologize. Christine knows all that, but we were giving away the first 2 chapters of one of the books recently. And so that's something you gotta do, or you should do.
Gotcha. Okay. Are your books like actual published books, not self-published?
So they are published, they're on Amazon, but the first one was interesting. It was a ghostwriter, but not really. I put a lot of time and effort into that. But the second one I wrote myself, so it took a year and a half. But I wrote it myself, and it's more of a personal finance book, so it's more than just real estate. But the first one was more about real estate, just multifamily, and how I started off in the business and grew it.
Okay. And the reason why I'm asking if they're self-published or like an actual publishing house is I'm curious to why you only give out 2 chapters versus just giving them the whole book.
Yeah. So if you come to our events, we hand out a lot of free books there. And then the new one, we're not there yet. I want to recoup a little bit of my cost.
I see.
But probably a year or 2 down the road, we'll start doing that as well.
Okay. Yeah, I'm curious. Yeah, so with all the events that you host, the meetup, the conferences, has that, like the hosting events, has that been a really big part of your capital raising?
Yeah, it has. So what we found is, and obviously COVID changed everything, or it highlighted a lot of stuff in many aspects of our lives. But a lot of our new investors came from when I spoke at live events. If you're raising money, I tell our folks we're selling either Corvettes or Bentleys. That's who our audience is. Those are very high touch sales jobs, right? If you look at it that way. And so having the in-person speaking on stage, meeting them in person, hosting our network, our own meetup is a big deal. It still has that personal touch, but COVID changed everything. And so that was what really got our YouTube channel off because, man, we need to keep buying stuff. There's going to be some good stuff on sale here. People freaking out about everything, and we can take advantage maybe with our investors. Mm-hmm. And so really it was, how do you do that? So I just went to Best Buy. They put it in my trunk safely and remotely for me. And then went home and went to the office and just started talking into it. So the first videos are not great. I want to tell you that right now. If you want a good laugh, look at some of the first videos. And I think we're getting a little bit better, but that really had a bigger reach. So now we've raised that YouTube channel now has introduced us to investors. Quite a few investors overseas now, Switzerland, Philippines, where we've got it's not a lot of them, but still it's enough to it definitely helped for sure.
That's awesome. And you're doing what, 1 video a week? And it change out outfits, or how often are you recording your videos?
So we do, they try to get me pinned down on Wednesday morning every week, usually sometimes I'm traveling. So we try to shoot 2 or 3 per Wednesday just to build up a whole slew of videos so they can, set it up and it gets produced.
Right. That's awesome. From all the different activities that you do to raise money, if you have to pick like the top 1, 2 that actually brought on the most amount of money or brought on the biggest type of investors, which one would you say that is?
I still go back to the in-person meetings, speaking on stage. Whenever you can do that, it really, 1, it gives you credibility instantly, just from human nature. And then 2, it makes you more of a human being. You're a real person. You're not just hiding behind a computer screen. I think that's really tough to raise money like that. So I'm a firm believer in being there in person at events.
I see. Okay. And then your nurturing sequence. So once someone signs up on your website, opts in, what kind of training are you sending them and for how long?
So when they sign up, we have our call, we've got our meeting either way with myself, but usually it's myself. I usually take most of those calls and meetings, but sometimes Savannah can hop in with and help me out. She did today. But then once we have that conversation, we can get them onto our investor portal so they can see live deals, basically probably that next day. And then but we tell them, look at these live deals because we have different types of offerings and they speak to different investors. So if you have questions, definitely let us know. So we definitely heavily promote. We love educated investors and want them to ask questions to Savannah and I.
Gotcha. Okay. So you want them to book a call with you as soon as possible. You don't necessarily want them to go through a certain amount of videos first or anything. So that way, by the time they get on the call with you, like they're pretty hot, right? They're like, okay, I'm ready to invest. Tell me what the next step is.
So it's amazing. Like I've probably had only maybe just a handful of calls where it was folks that maybe had $5,000 to invest, and that was their last $5,000. So out of all the calls we've had, honestly, and I'm still pretty amazed by that, we haven't had to do a lot of that. So a lot of the leads that we get, they are either accredited or sophisticated already. So I don't know. Honestly, I don't know how we've done that yet. I needed to ask Christine, and she may not know it either. But so far, what we've been doing is really been working on basically getting quality leads right on that first phone call.
That's phenomenal. So I want to expand on this a little bit because yes, they're quality leads, but do you have to do much education with them, or by the time that they get on the call with you, like they're pretty self-educated at that point to know about you and what you do and how you do things, and they're pretty hot to take the next step with you?
I just got off a call about an hour ago, but she owns a few mobile home parks. She owns a few single family, but she wants to go more of the passive route. And so she she admitted she did some Facebook stalking, watched some YouTube videos. And so she felt like she, one, had a connection already. And then two, she knew what we were all about by having that content. So if we're on that call and they come in thinking they want to do multifamily, but I mentioned our triple net fund and they've never even heard of that, I can point to our video, one of many videos on YouTube about that specific or development, or we put a lot of different content out. So if they do need to go to somewhere, we can point them to that channel and get educated that way as well.
I see. Which brings me to a lot of your investors have experience in real estate already, but they want to invest with you because they want to invest passively. Or do you also attract a lot of people that never invested in real estate before and are now investing as a passive investor?
I'd say it's mostly folks that have invested in real estate, but you definitely get some newbies. On our calls, what I'm looking for is I want to make sure that they've done more than just investing in mutual funds. Because if they've just done mutual funds, maybe it's snobby, but I don't really consider that investing. That's just like throwing your money at the wall and hoping it goes up. But if they've done some kind of like single family, or they invested in a private equity fund, or pick their own stocks, or a CPA, there's different ways to be qualified, in my opinion, to be sophisticated. But if it's just mutual funds, I tend to encourage them to go to either, one of these 2-day events. I do warn them that it's probably a guru event. So if to buy something, they don't have to buy something at the end, but they're going to get pitched on Sunday night. But they can learn some things, at least the basics at those events.
Gotcha. Okay. Yeah, that's good. I like that. So it sounds like because of the type of events you attend and you speak at, it attracts people who are already in that journey of learning about real estate investing, and in some cases already started to invest into in real estate. And
it's just much easier to go to those folks that understand real estate already, because you don't have to sell them at that point. You just got to sell them on you. If you have someone that's coming from, like when I was starting out, a lot of my contacts were in oil and gas. So I had to convince them that they knew me, right? So that was the easy part, but it was convincing of investing in an apartment building. They didn't even understand how that even works. So it's a little easier to speak if you go to events they're already geared towards real estate. You're going to have a lot more conversions. That doesn't mean you don't talk to anybody else, but you're going to have a lot more success at a group that's already thinking real estate.
Okay. Yeah, that makes sense. I was playing around with like the different lists this week, and I know a lot of people like to go after doctors and physicians. And so I went on ChatGPT, did a search for all the different specialists, the name of the specialists of MDs and DDS and all of that stuff. And I compiled a list of almost a little bit over 1.4 million like doctors and dentists type people. And yeah, so I was just curious. I was just wondering how to best go through this. But I think that with this conversation here, I need to figure out how to identify from that list who have an interest in real estate. So that way that's, that conversation and that exposing them to real estate becomes easier.
Well, I'll be a
what are
little
your thoughts on that?
stereotypical on doctors. So and I like them, they're friends. But they're some of the hardest people to convince because they're pitched every single day on car washes to the new crypto, or like they're just pitched all the time. Because people like Tim put 1.4 million people off Google and just start calling them. And so to me, what I found with like groups of doctors is that you've got to get one. If you get one doctor, then they're going to tell all their 5 or 6 or 10 buddies that, hey, this is a legit investment offering. But to break into that is tough. Like you just got to get one. That's the hardest piece.
Gotcha.
Just because they're pitched so much, right? They're just inundated with offerings, right? And they're also strapped for time. They don't have a lot of time. They're usually very busy individuals, so they don't have a lot of time to know what's good or what's not good. So you got to find those few that are really into investing and then break your way in that way.
Gotcha. Do you have a type of person that is your favorite or that you found to be the easiest? So if doctors are not it, then who's
doctors
the other?
Are doing the hardest, I would say. I don't know about easiest. Really, it's just, like I said, it's just people that are already investing in real estate or are already into it. That's the easiest part. You're just at that point, it's just pointing to your track record, what you've done, what's your business plan, and how you execute. It's simple like that. So someone that's already thinking real estate is the easiest way to go.
That is so interesting because I interview another expert I've known for a long time, and I stay away from real estate events. That's where all the real estate people raise money from. And so, he has a different type of mindset. I go after the same people that financial advisors go after. Yes, it requires more education, but according to him, it's cheaper money. Yeah.
I think it depends. And not all real estate events are created equal. I've been to one RIA in San Antonio, and not knocking the RIAs, but I got 0 leads out of 2 days at that event. Like it was a lot of single family flippers, right? Which they're not thinking multifamily. And so so I swore them off. So it definitely matters what event you're going to.
That makes a lot of sense. You had mentioned that you started in 2010. So right after the last market crash. What is so you've seen a lot of things in this space. What's your crystal ball telling you about this current market?
Oh man, this is a very good topic. And also my background is economics. So I can talk
perfect
for hours. So you don't have to cut me off, Tim. So what's interesting is that we own multifamily right now in 4 different states. And so we have a pretty good idea in multiple markets in those states. So we have a pretty good idea of what our rent growth is. We're still seeing 5% rent growth pretty much, and then some even higher than that in certain markets. And then occupancy still remains strong as well. One of our investors read a Goldman Sachs or a thing that's saying that cap rates were going to go to 9%. I'm like, that's the stupidest thing I've ever heard in my life. Just because the underlying demographics, like rents are up, they're not going to go down. We still have a housing shortage in this country. So you're not going to see rents go down, maybe level off, but we've already had 30-40% rent growth for the past 3 years or something, whatever it's been crazy what it's been. So you have more demand than supply. And then can the Fed push rent rates up any farther? That's really the question and how long can we sustain that? And Goldman Sachs is the one also saying that rent rates are going to start going down early next year. Maybe some are saying late this year. So I just don't see cap rates just being destroyed next year. Now, the really interesting thing is right now, the saving grace is that, and I think they're saying that because they're showing a lot of resets and these rate caps burning off. You're seeing a lot of folks right now. If you have a stable deal, you're going right into a Freddie, Fannie, or HUD loan right now because you can get a fixed rate, mid-5 interest rate deal. And when you're good to go, you don't have to get the rate cap anymore. So there's definitely ways. If you have a stable deal, you have an out. If you're not operating yet optimally, then you got to get there as fast as you can, because then you can do your refi and get away from the whole rate cap thing if you have a bridge loan.
Gotcha. Okay. I was at an event that Jim Rogers was there, and he said that he's expecting the worst market that ever happened in his lifetime. He's saying that he thinks that there might be another wave before that actually happens, but he is expecting something like huge happening in the horizon. Why do you think he's saying that? What are there any indicators that you're seeing that might be the case?
I don't. I guess I would argue the opposite. I don't think it can get any bigger than '08 through 2010. That was at that time, we had folks that paid a lot of money for property. We had the second largest economic downturn in US history that only lasted about maximum, depending on who you talk to, max is maybe 18 months. But at that time, you had everybody, you had it was a Mexican standoff. You had residents, you had lenders, you had borrowers. And in '08 through 2010, everybody just fired on each other. So no one won. It was very messy. And when COVID, it was a very similar situation. Like all of a sudden, like, were we going to get our rents? And then were we going to pay our mortgage? And then so all three of us had that, but no one fired. So it was a very smooth transition. We just all worked with each other for the most part. So it wasn't very big, a huge blood in the water event like some of the gurus were asking or calling for during that time. And I just think going forward, we're going to have to be in a lower interest rate environment, no matter what inflation is. We have so much debt as a country. We can't afford, and really globally, every country has the same issue. China just cut their interest rate a few weeks ago. So they're already feeling the pressure. They blinked first, which is fine. Someone had to do it, but you're going to start seeing that. We just can't, none of these countries can afford the amount of debt that they have at these current levels, even though that historically they were still low on interest rates. But we're going to have to see some kind of break there. So I just don't see a huge correction, maybe some, but it's going to be folks that didn't buy a rate cap. It's going to be partnerships that blow up. It's going to be stuff like that. And that's not as widespread, I think, as some people think.
I see. So are you thinking that even with all of these people with the rate cap expiring and stuff, like there'll be more inventory coming onto the market that with your projection, they'll all be absorbed?
I think it will be. Yeah. So just to really test the market, we had a property that was potentially ready to go in Oklahoma City. So we put on the market 2 months ago. We had 6 offers, and 2 of those were basically last year pricing. So I got last year's pricing in Oklahoma City on a C-class deal. Now it's because it's stable. They can get Freddie, Fannie, HUD, but really it's the tale of two cities right now. If your property is stable, you can put it on the market and get just about, if not at last year's pricing today. We have some BOVs on some other properties too. And it's Oklahoma City kind of proved it up to me that there's enough cash sitting on the sidelines. And it's only an 88 unit deal. Now it's not like a huge deal, but still there's enough cash sitting on the sidelines that folks are ready to invest. I just think even if we do have some stress, you're going to see so many people jump in and offer on these deals, especially in bigger markets like Dallas, Fort Worth, or Columbus, Ohio, places like that.
Okay. So let me ask this way, and this is a newbie question here. If an operator has a deal, rate cap expiring, can't afford to renew that rate cap, if he has a way to raise money for that renewal, then I assume that's the best way to go? Or like, how would you navigate through a situation like that without having to sell and take a loss?
Yeah, so we're seeing folks that didn't buy a rate cap, which they should have, but that's a whole nother conversation. But if you didn't buy a rate cap, obviously your interest is double, if not more, of what you thought it would be. So you can buy on cash flow. Now, if you come up on a refi and they're going to make you do again, if you're stable, then it doesn't matter. If you're not stable, if you're below 90%, then you're going to have to go make some really tough choices. And really, it's just a math equation at that point. You have to see, okay, are we going to have to come to close with some cash? Or is it just trading out the debt even and not pulling out any cash right now? It just depends on your deal. But there's folks that have had to do capital calls. I know colleagues that have had to do capital calls because they didn't have a rate cap, and it was a big issue. And when you're doing those bridge loans, they're at the end of when it was cool to do them. They were really pushing for 2-year bridge loans, but we made sure that we had 2+1. So we had 1 year of extension. And then we also baked in a year of extension on the rate caps too, just to give us longer lead time. At the time, we thought if we have to use it, we're not going to like it. It's a point to extend. But at the end of the day, I'm very glad we did. We haven't had to use any of those yet, but it's good to have that in your back pocket.
Okay. That's awesome. Thank you for that. So you're in multifamily, you're developing new multifamily, you're converting office into multifamily. So you're pretty big in multifamily, and then you have the triple net assets. Are there any other asset type that you like that you see you focusing on in the near term?
I think now that we've got 11 of these downtown office building conversion, I think eventually we're going to have to. We're looking at right now. We got sent 1 million square feet of a former Fortune 500 office or campus, their office. And so you can't do all multifamily there. So I think eventually on these projects, we're going to have to get some kind of hotel or some kind of flag or something like that in there. So I see us maybe going into that just because the size of these buildings we're starting to see get foreclosed on or sent to us from these hedge funds directly, or it's going to force us to break that space up. It's just, you can't have 1 million square feet of multifamily. It's too much.
I see. So let's talk about that. Can you share with us the opportunities that exist around, that office space? Because a lot of people think it's dead. So share with us the opportunities around that.
So there's a lot of confusion, and it's a good thing for us investors on what is a vacant office building worth today. I had a Dallas office broker call me 2 weeks ago and asked me, what I thought that these buildings were worth. And I told him 0, they should give them to me, just because it's like asking a barber if you need a haircut. It's okay. Yeah, I'll tell you what it's worth. You're not gonna like it, but honestly, we just picked up a deal here in Texas, a downtown location, at $40 a foot. But and not only just the building but we also got the block. We got a big parking lot and a big parking garage as well. For 42 a door. We're right downtown. Anyway, so we're seeing a lot of good values there. That was a foreclosure sent to us, but we've paid more than that, but only if we can use a lot of the systems in the building. So we've paid almost, the highest I think we paid was like $90 a foot, but the guy had just put in $9 million worth of HVAC, which we can reuse. He did $3 million worth of new sprinklers in the building, which we can reuse. The math on what you can pay really varies on the building. And it's you basically have to walk every single one with your architect and GC to get a feel for it. But the office conversions, we're usually 50 to 75K a door cheaper in a downtown location than a brand new. And so our basis going in is way lower than our competition. And then it can be even higher than that if it's a historical building. 7 of our 11 buildings are historical. So we get grants from the federal government and most of the time the states as well. That really offsets some of our costs. But basically, if we can be all in at $220 a foot on all-in cost, a net cost, and then usually we're getting like $2.80 to $3 a square foot in rents in the locations that we're at in these downtown locations. So the math makes sense all day long.
It sounds an incredible amount of opportunities. Why is it not more popular?
It's hard. And if you can convert, it's much easier to convert in a hotel because you already have the plumbing. You just got to move walls around. We do have one. We actually bought a senior living facility here in Dallas Fort Worth and are converting it back to multifamily. And so that project's going to be way easier. We're basically going from 380 doors to 198. So we're combining doors to make them bigger, making the kitchens bigger, making it more usable for multifamily. But the office space, that definitely is, you have to work with your architect. Our biggest floor plate so far that we've done effectively is the 32,000 square feet, which is a big floor plate. That's huge. And so what you got to be creative on there is sometimes you're going to have dead space because the windows are too far away from the actual hallways or the space of the dead space. And that one, to combat that, we did a whole row of nice looking storage units for the residents in every hallway. But you got to be a little creative like that. There's one in Fort Worth. We're actually going to core down, cut out the inside of the building all the way down, bring natural light all the way down to the floor, down 6 stories on that piece of the part of the building to get more unit count in there. So you got to be a little more creative on it for sure. And then really just work with the best GCs. Not every GC can do this. So you have to find the right team to do it.
I see. Okay. On our last interview, you had mentioned the demand and supply of how offices work. You're saying that the reason why in a lot of downtowns is like 50% vacancy right now.
Right. Yeah.
Can you share with everybody on how that works, and would offices go away or
before COVID, most downtown locations were 33% vacant across the US. So before COVID, we had too much office. But everybody was fine with it. They all understood, okay, you're going to have 33% vacancy and just wrote that in. But COVID hit. And then obviously that the demand is lower. I still feel like we need office space. There's definitely benefit of people for certain industries meeting together, being creative. You can't do that through Zoom, in my opinion. It loses that sizzle, right? But some definitely can. The industry, if you're coding, you can be in your office or your, house in the Bahamas, whatever it is, right? You can do remote. So there's more of that. Specifically, I know way more about downtown Dallas. So we have an office building there. We just bought in April. We're converting to multifamily. There's 6 others around us in downtown Dallas doing the same thing right now. And so right now, downtown Dallas is 50% occupied because I'm an optimist. But if there's no new employers move in, and with us 5 of those 6 office buildings being converted now, because we're taking out so much office, the occupancy should go up to 70%, which is back to where where it was pre-COVID. I think and then obviously if you get more new employers, the better, right? That's a good thing. But it can really change quick too. All 6 of those projects should be done in the next 18 months or less. Downtown Dallas is going to flip just super quick. But it's because there's really no rezoning that we have to go through in Dallas. Markets like Chicago, New York, San Francisco, they're going to have to really change their zone and how fast zoning and approvals work. Because we looked at Chicago, it was an extra 18 months hold time to convert an office building because you got to go through the rezoning process, and who can afford that? That's crazy. So it's interesting. I was just on a panel this weekend and we were talking about that right now our focus are on the cities where we can quickly change or quickly repurpose the building and not have to have this long hold period.
Gotcha. What do you think about this idea? And I'll preface it with sharing about a story of this man who used to be the richest man in Texas. He was the shopping center king here in Houston back in the 80s.
Okay.
And so what he did was he would buy one side shopping center on one side of the street, drop the rent, attract the tenant from the other side, buys the other side, raise rent on both sides. And he did a ton of that. So in your office, can you do something similar to where now that the offices are 50% occupied, you buy some of them just to hold? Once all of these projects of yours and the others finish and the occupancy goes up, you sell at that time. You don't have to change its use, keep it as an office. Have you thought about an idea like that?
Sure. It's a short answer. We've bought in Atlanta, we have 2 office buildings, but they're right next to each other. But we're converting both of those right now. So we haven't done that yet, but that's an interesting strategy. But you do definitely want some occupancy in there because right now it's really hard to get, if you're an office owner, it's really hard to do a refi. You think it's hard for multifamily, you wait till you try to get an office loan right now. They're maybe 50% on their prior value. It's just brutal out there for them. So to hold it like that, you'd have to have a heck of a cap rate at 50% leverage for it to make sense on that, even if it's partially vacant.
The seller's desperate enough. Hopefully you can get a seller carry back and the sellers.
And we're seeing those. Yeah, those are definitely back in vogue on these office folks. We have 4 of those. 4 of our projects have seller carries involved in them.
Oh, I see. Okay, very cool. All right. So what are some of your favorite tools that you use in the business?
Oh man, it's big on communication with our team. So someone introduced Slack a year and a half ago. I was like, another app in our organization. But actually, it turns out I'm actually a huge fan. So that really helps keep all of our different departments in touch. You can do attachments through there. So it's, I don't know, for those who don't know, it's like AOL Messenger, but with attachments. And it's a really good way to keep track of everybody.
Yep. You're dating yourself with the AOL.
I know.
Awesome. All right, Kenny, you've been, amazing sharing with us so much information. The folks want to reach out to you and connect with you, invest with you, partner with you. Where would you like to send them?
Sure. Yeah. So the best places are our website. So wolf with an e-investments.com. And then like you said, we're very active on Facebook, on YouTube, on Instagram now. And then we do a lot of in-person events where I'm speaking. So I'd love to meet you there too.
Okay. Awesome. Now, other than investing with you, are there any other resources, connections that you're looking for that perhaps me and the audience here can support you with? Yeah,
sure. So right now, obviously, existing multifamily is basically dead deal flow wise. So we're really focused on our triple net and development business, mostly on the office conversions. But right now, honestly, we have so many deals coming to us on the office conversion space that I probably have 1 or 2 a week. We're actually turning down, not because they're bad deals, but because just the equity needed right now to do those are just massive. And so really that's our need right now is just to get more equity and get it out faster in these projects.
Okay, awesome. All right. So we're going to wrap up this part of the interview and then we'll open up for Q&A here.
Sure.
So for the recording purpose, I'm going to wrap it up like if we were to end this. So Kenny, thank you so much for doing this interview with me. It's been phenomenal. I really appreciate you sharing all of your wisdom and experience with us. Thank you, Kenny.
Yeah, thanks, Tim. Appreciate it.
Awesome.